everyone, and thank you for watching my videos. In my opinion, one of the reasons why it is so difficult to get involved in the Forex market is because there is a tremendous amount of information one must understand in order to learn how to make their investment successfully. And as we can see from the previous videos, there is just so much information that can be overwhelming and difficult to digest. And then on top of that, most people really don't understand how the Forex market works. Now, in my first video, I gave you some basic information on how the Forex market works, but what I want to do in this video is I want to take the time to give you more specific details as to how the Forex market works. Also, it's very important to know how brokers make their profit in the Forex market, because when we work with the brokers online, we give our money to the brokers, they make the accounts for us. I think we need to know exactly what they're doing with our money. Okay, so let's talk about the history of modern Forex trading. So here's what we need to know. When the CFTC passed the Commodity Exchange Act as well as the Commodity Futures Modernization Act, what this has done is that this has created the modern Forex market. This is what has enabled many investors to get involved in the foreign currency market, open and close positions. However, because of the internet, it is easier nowadays to make these trades because we have trading platforms and we have so many brokers out there in the market that there's a lot of competition for investor clients. Okay, so let's talk about the different types of brokers. So we need to know that we have dealing desk brokers and we have no dealing desk brokers. The dealing desk brokers, we call these the market makers. And the no dealing desk brokers, well, there are two types, and we'll explain the difference between the two types of no dealing desk brokers after we talk about the market makers. Now, here's what we need to know about the market makers. They make their money through spreads. If you notice, when you go to the airport to exchange money, or when you go to the hotel to exchange money, they have their bid and ask prices spread far apart. Well, the reason why it's spread far apart is because that's how they earn their profit. And also, they have the freedom to make their market whatever they want it to make. Because as we know, there is no central headquarters for the Forex market. So if you had your own market, you are at liberty to set the bid and ask prices to whatever you want it to make. And also, they take it for granted that many people who want to exchange their currency, they do it out of desperation. They're not going to have a newspaper with them that has the proper exchange rates. They just want their currency to be exchanged. However, nowadays there are so many brokers out there, the competition has gotten fierce, so many brokers are forced into using the interbank rates. So, here's how it works with the market makers. There's you, and we want to purchase 10,000 euro dollar units. And we go through the broker's trading platform, and if your position is a winning position, here's what happens. It gets matched by the losing client's position. For example, your broker has winning clients and your broker has losing clients. So if your investment is a winning investment or profitable investment, what your broker will do is they'll just take the losses of the other clients and use that as your profits. However, if your investment is a losing investment, then the broker will counter trade that by opening a position that you closed. So either way, your broker makes a profit whenever you open and close a position. Okay, So here's what we need to know about the market makers. A broker will only take the opposite side of your winning trade if there aren't enough matching orders from the losing client. What does this mean? It means that if you lose your position, your broker will simply take whatever you lost. However, if you profited from your position, your broker will take your other client's losses and use that as your profit. However, if there weren't any losing clients, then your broker will have to provide out of their own pockets your profit. And the way to do that is to whatever position that you opened, they'll take the opposite side. Meaning, if you went long on the euro dollar pair and then you close that position, that means your broker must open a short position. But if there's enough money from the losing clients, then they won't have to do that. So that's how the market makers make their profits. Now, let's talk about the no dealing desk brokers. Now, they never take the opposite side of any position, winning or losing. What they do is they just pass your orders onto the interbank markets. So, there's you. And then you purchase 100,000 euro dollar units, and that gets registered onto your broker's trading platform. And here's what happens. Your broker just simply passes that on to banks, hedge funds, mutual funds, and other brokers and other clients. Therefore, those are the people that will cover your profits while if you have a losing trade, then your broker makes a profit off of that. So your broker does not have to worry about giving you a profit out of their own pocket. And there are two types. We have the straight through processing, or we have the straight through processing with the electronic communications network. So here's how straight through processing works. It just means all transaction orders that gets routed, it gets routed to liquidity providers that have access to the interbank market. And these providers, they set their own bid and ask prices. So here's how that works. So let's say your broker has access to 3 companies that set their own bid and ask price. So let's say we have liquidity provider A. Here's their bid and ask price. And here's another liquidity provider with a different bid and ask price. And another liquidity provider with their bid and ask price. So if we notice, we have 3 different bid prices, 3 different ask prices. So here's what your broker will do. Your broker will take one of the bid prices and one of the ask prices. It doesn't have to be from the same provider. It could be from different providers. But you have to keep this in mind. Your broker's in the Forex business to make money, right? So your broker has a right to set the bid and ask prices to however they see fit. That's why your broker here has selected the bid price from provider B and the ask price from provider C in order to have the spread that favors the broker. That's how your broker will more likely earn their profits. Now, let's talk about the electronics communications network brokers. What they do is they allow the orders of their clients to interact with the orders of other participants. And by doing that, this creates more transparency, and also this satisfies the investors. This makes the investors feel that the brokers that they're working with are more trustworthy, and this also motivates the investors, the clients, to invest more. So it's also difficult to place a fixed markup, so the ECN brokers, they usually get compensated by charging a small commission. So having said that, we know that there are positives and negatives of the many different types of brokers. So the answer is, which broker is really the best? Well, it's really up to you. Again, whatever your trading style is, whatever your trading strategy is, you're just going to have to figure out for yourself which is the best for you. So there really, in this market, there really is no best way of doing things. It's just many different ways, and it's up to you to determine which is best for you. And that's the reason why I suggest trading with a demo account, because you can try different ways. Well, but before we get to the demo account stage, first we have to check which type of broker is right for you. The only reason why I said that is because I just want to put that into your mind that there really is no best way of doing things, just many different ways. Okay, so back to choosing our brokers. So remember, we also have to ask ourselves these questions. Is it better to have a tighter spread but pay a commission, or a wider spread with no commissions? So there are many brokers online. They'll advertise no commissions, no fees, but it just means that the spreads are wide. Or many brokers will say, come open up an account with us because we have the smallest spreads, but they also charge commissions and transaction fees as well. So in this chart right here, I've listed the two types of brokers, but the no dealing desk brokers, I've broken that up into two separate categories. So really three types of brokers, as we can see. So, and by comparing these three columns, we can see that there are advantages and disadvantages of all three. So I'm going to give you a second to let all of this sink in. Okay, so let's talk about how to choose a broker. This is very important because out there in the Forex market, we have good brokers and we have bad brokers. I don't want you to find a bad broker, I want you to find a good one. So in this video, we're going to learn the proper way of finding a good broker. So, in my opinion, we need to think about security. That's number one. Meaning, is your money safe with this broker? Is this broker going to take your money and run? Or is this broker going to take good care of your money? Is this broker licensed and regulated in accordance to what country your broker is operating from? Well, we can check to see whether or not your broker is regulated by following these regulatory agencies. So I've listed the United States. They have quite a few. United Kingdom, Australia, Switzerland, Germany, and France. These countries, they have regulatory agencies. There are other regulatory agencies in other countries. But before you open up a broker, you should check to see if your broker is listed in at least one of these agencies and in the country in which they're operating from. So don't open up an account with any broker that is not regulated with any of these agencies that you see in this slide. Okay, number two, transaction costs. Sometimes you need to sacrifice low transactions in order to find a reliable broker. So again, some brokers charge commission, some don't. Some offer wide spreads, some don't. Or some offer more narrow spreads, but that doesn't matter. Just find a broker that you can trust. So that's more important. But also, a good broker is a broker that should at least keep their transaction costs low and their commissions low, and their spreads more compatible with what's on the interbank market. So keep that in mind. So it doesn't pay to always look for the lowest commission or the lowest transaction cost or the most comparable spreads. So again, just find a broker that you can trust. And number three, deposit and withdrawals. A good broker is a broker that will allow you to make deposits and withdrawals without any unnecessary hassles. For example, if you want to add funds to your account, you should be able to do so quickly and efficiently by either a credit card, PayPal, bank wire, or any other suitable method of transaction. Also, if you want to withdraw, you should be able to withdraw without any unnecessary hassles, without any extended waiting periods or any interviews or having to answer unwanted questions. That is actually one of the biggest complaints that you'll hear from investors when it comes to dealing with their brokers. Many investors will complain that brokers will not allow their investors to withdraw a certain amount of funds and actually having to wait a long period of time in order to withdraw funds. So if that's something that concerns you, do a Google search or a Yahoo search and type in the name of that broker that you want to get information about and see if the name of that broker has raised up any red flags by any consumer watchdogs. Because it is very important to be able to trust the broker to where whenever you want to withdraw from your account, you should be able to do that quickly and efficiently. And also keep this in mind. Your broker, they only hold your money to make trading easier, so there's really no reason for you to have a hard time getting the profits you have earned. So your broker is not supposed to keep your money, they just hold your money. So if your broker has to use tricks and tactics to discourage withdrawals, that should tell you something about your broker's character. Probably not a good character. And also, your broker should make sure that the withdrawal process is speedy and smooth. That is your broker's responsibility. If it's difficult for you to withdraw from your broker, then your broker is not a good one. Okay, now let's talk about trading platforms. The trading platform of your broker must be user-friendly and stable. If it's difficult to use, then it's not a good trading platform. If it's not a good trading platform, then you need to find a good broker. Always check what the trading platform has to offer. So look at all the tools. Maybe there might be one or two tools that I have not incorporated into my videos, but study it anyways. There's a lot of knowledge out there online to where you can learn more about that learn more about that tool that's on your trading platform. And of course, I always update my videos anyways, so whatever new tools are available, I will continue to make more instructional videos as the ones that I've made in the previous videos about that tool. So learn more about your trading platform and see all the benefits that are in the trading platform and learn how to use them. And also, here's a question that we need to answer. Does it offer free news feed? So again, we need the news in order to get the fundamental analysis. So your trading platform should have access to the top news agencies, whether it be Reuters, CNN, BBC, and also data releases from the central banks and from the governments should also be expeditious as well. Okay, so number 5, let's talk about execution. It is mandatory that your broker fill you in on the best possible price for your orders, And also, when you make your trades should be executed immediately and there should be no change in the prices. Now sometimes there's so much volatility in one pair that sometimes an order doesn't get processed because the server is too busy. But when you agree on a price, that price should be the price that you pay, no more, no less. Okay, and also, there really is no reason for your broker to not fill you in or close to the market price you see when you click the buy or sell button. So again, if the market is not that volatile, whatever price you see, you click on that price, that should be where you've entered the market. That should be where you open the position. It should not be different at all. And also, the speed at which your orders get filled in is very important. Because again, there's a lot of volatility in the market. So your broker should be able to process all the orders in an expeditious manner in order to fill the needs of their clients. And also, if you're a scalper, the efficiency of the trading platform is especially important because you want to catch those quick profits in volatile markets. Okay, and number 6, customer service. Now, how efficient are they in solving problems? Meaning, if you have a problem, you should be able to contact someone, or maybe contact a licensed broker, and that person should be able to answer any questions you have and address any concerns that you might have. So a good broker also has good customer service. And also beware of bucket shops. Now, here's what I mean about bucket shops. It's an illegal practice where you open a position, but what your broker will not do is that position will not be reported to an interbank market. Instead, the broker will just write it on a sheet of paper and place that paper either on a table or a secret ledger, or in this case, drop it in the bucket, and then just wait until someone loses or someone has a losing transaction, or anticipate the fact that you're going to have losing transactions, and then use the funds that you've removed from those losing transactions to cover any profits that you might earn, or if you decide to withdraw, use the funds from the losing clients in order to satisfy your withdrawal request. So it's not good for a broker to do that. A broker should be able to process the same orders in the interbank market on your behalf. So bucket shops, they're illegal. Okay, so how to protect yourself after selecting a broker. So again, now that you've chosen a broker, here's what you want to do. You want to be able to compare price feeds, and you want to be able to record everything. Because your broker might perform some sort of unethical act, you want to document that. Because when you report that to a regulatory agency, they want to have a record of that so they can do some investigation on their own. And practice good trading habits. So know that no matter how advanced your charting software is, no matter how much time you put into finding the right broker, no matter how complicated your trading system is, without proper discipline, you will lose. So even if you found a really good broker and you can trust that broker, still learn how to trade more efficiently, and also study the markets well and use your demo account so you can make all your mistakes in the beginning with your virtual money, so you make few mistakes with your real money. Okay, now how to open an account. So first, you select what type of account do you want. Do you want a standard account, a mini account, or a micro account? Also, the registration, that's when you fill out all the paperwork, and then you submit that online or fax that, or however you want to submit the documents. And then you activate your account by providing the appropriate amount of funds. That could be through credit card, bank wire, PayPal, or any other method your broker has available. And choosing which type of account to open, that's important, because when we're talking about leverage and margin and how that can hurt your account seriously, we need to know which type of account is right for you. So selecting the type of trading, personal or business. So are you trading on behalf of a business, or are you just trading independently? So we have to know that as well. Also, we need to select the size of the account, as I mentioned before, and always read the fine print, because every time you sign a contract or sign a legal document, there's always that fine print. So make sure you read every word so you understand, because sometimes your broker might be a bad broker, but there's nothing that a regulatory agency can do because the broker has done everything according to the contract. So be careful. Read the fine print. If you don't understand the fine print, find someone who can understand it better than you. But just make sure that you understand everything that your broker is doing. And also, you can even open a managed account if you want a broker to trade for you. So maybe you don't really understand the Forex market, even though I've made this video, and you really don't understand how to make trades even after I've made all the previous videos. You can still hire a broker to make trades for you. So that's another option. And also, you can register by filling out all the application forms and paperwork. So you can either download these forms from the broker, fill them out online by using Adobe or whatever, and then send it back to your broker. And then your account will be ready for use after your broker has received the funds. And I can't stress this enough, use the demo account before you use your real money, so you can learn about the Forex market without losing money. There is so much to learn about being a successful Forex investor. So if you missed a lot of the information from my previous videos, go back and watch them again, and watch them as many times as necessary, so we can gain as much knowledge as we can gain in order to become successful investors. Because whatever we can learn about this market, we can use that to give us a tremendous advantage as investors. Thank you for watching my videos, and good trading.